Hello everyone, my name is Lotte de Sterk and today I'm going to tell you why you should or shouldn't invest in Kinepolis Group. First, I will explain different ratios in the financial analysis. After that, I will explain some information from the stock market. Then I will explain my conclusion and lastly, I will show my sources. Now I'll begin with the financial analysis. Firstly, I will talk about Kinepolis' liquidity. I will do this by focusing on the current ratio, which indicates the company's ability to meet short-term obligations. Generally, a ratio between 1.5 and 2 is considered healthy. However, as we can see, Kinepolis' current ratio was 0.68 in 2022 and declined further to a 0.58 in 2024. A ratio below 1 signals potential liquidity challenges, suggesting that Kinepolis may face difficulties in covering its short-term liabilities. Now I'm going to assess Kinepolis' solvency by looking at the debt ratio, which shows the percentage of assets financed by debt. A healthy range is 0.3 to 0.6, with anything above 0.6 indicating higher financial risk. Kinepolis' debt ratio was 0.85 in 2022, signaling high debt reliance. Although it remained similar in 2023, this year it improved to 0.74, showing a positive trend despite still being above the ideal range. Lastly, I will look at Kinepolis' profitability by looking at the return on equity. Return on equity measures returns on shareholders' equity. In 2022, Kinepolis' ROE was negative 3%, indicating low profitability. This improved to 16% in 2023, within the typical good range of 10 to 20%. By 2024, ROE rose significantly to 56%, reflecting strong profitability and excellent returns for shareholders. Now I'm going to talk about some information from the stock market. Kinepolis' price to earnings ratio is 31.09 on 10 November this year, meaning investors are paying 31.09 euro for every euro in profit. This high PE suggests confidence in a company's future growth, though it could also indicate the stock is overvalued. In this case, the high PE likely reflects optimism about Kinepolis' recovery and profitability. Now I'm going to talk about the stock price trend. In 2020, Kinepolis' stock dropped from 60 euro to around 21 euro due to the pandemic's impact on theaters and revenue. In the beginning of 2022, it recovered to 62 euros, but didn't surpass this peak, fluctuating over the next few years from 2022 to 2024. The stock ranges in the last few years between 35 to almost 50 euro. In November 2024, it keeps fluctuating around 40 euro. This trend suggests gradual recovery, but shows that challenges remain for Kinepolis. Now I'm going to talk about my conclusion and say if it is worth to invest in Kinepolis or not. Kinepolis presents a mixed financial picture. Liquidity is a concern with a low current ratio of 0.58, posing short-term risk. The high debt ratio of 0.74 indicates heavy reliance on debt, which raises financial risk but also reflects investment in growth. Profitability is strong with a 56% ROE, showing effective use of equity. The PA ratio of 31.09 reflects growth expectations but may suggest some overvaluation. The stock price has also stabilized around 40 euro, indicating recovery since the pandemic. For growth-oriented investors comfortable with some risk, Kinepolis may be appealing, while risk-averse investors might have concerns about liquidity and debt. Now I'm going to show my sources. These were the sources that I used for my presentation and to calculate my ratios, and thank you for listening to my presentation.